Robotaxi tipping point. Waymo, Tesla, and the future of urban transport. The race to deploy self-driving robotaxis is accelerating, with Waymo leading the charge and competitors like Tesla and Zoox gaining ground. Recent announcements signal that the long-awaited shift in how people move around cities may be closer than many believe. But how close is close? And what will it take for robotaxis to reach a point of mass adoption? Expansion is underway. Cities on the radar. Waymo is aggressively expanding its commercial robotaxi service, now operating in Atlanta, Austin, Los Angeles, Phoenix, and San Francisco. The company has laid out plans to roll out in Minneapolis, New Orleans, and Tampa next year, with further deployments in Dallas, Denver, Detroit, Houston, Las Vegas, Miami, Nashville, Orlando, San Antonio, San Diego, Seattle, and Washington, D.C. by 2026. International expansion is also on the horizon, starting with London and Tokyo. Meanwhile, Tesla has secured a ride-hailing permit in Arizona, removing the final regulatory hurdle to launch its own robotaxi service there. Zoox is already testing its custom-built vehicles with the public in San Francisco via an early rider program. The missing pieces: geography, competition, and ecosystem effects. Despite these advances, mass adoption isn't imminent. For robotaxis to truly take off, three factors must align. Geography. Saturation in tech-forward cities like San Francisco is important, but the tipping point will come when robotaxis become commonplace in densely populated areas of the Southeast, East Coast, and Midwest. These regions represent broader societal impact. Competition. A competitive landscape will drive down prices, foster innovation, and offer diverse business models, making robotaxis more accessible and appealing to consumers. Ecosystem spillover. The real catalyst will be the emergence of startups and businesses built around robotaxis. This includes service-related enterprises and companies like Point One Navigation, which provides the precise location technology needed for safe operation. Troubled waters. Monarch Tractor on the brink. Not all autonomous vehicle ventures are thriving. Electric tractor startup Monarch Tractor is facing financial collapse, with internal memos suggesting potential layoffs of over 100 employees or even complete shutdown. Despite raising $220 million, the company is struggling to overcome legal issues, a lawsuit alleging faulty autonomous operation, and execute its restructuring plan. Funding and partnerships. The flow of capital. Despite Monarch's struggles, investment continues to pour into the broader autonomous vehicle space. Autonomy, the EV subscription company, secured $25 million in financing to expand beyond Tesla vehicles. German charging startup Pionix raised €8 million in seed funding. Point One Navigation secured $35 million in Series C funding, valuing the company at $230 million. Japanese self-driving tech firm Turing raised $97.7 million in equity and debt. Aluminum sorting startup Sortera raised $45 million in combined equity and debt. Other notable developments: Ford integrated with Amazon Autos to offer online vehicle sales and financing. Google is replacing Google Assistant with Gemini in Android Auto. Joby Aviation is suing Archer Aviation over alleged trade secret theft. Pony AI is partnering with Chinese manufacturers for autonomous truck deployment in 2026. The future of urban transport is becoming increasingly automated. While challenges remain, the momentum behind robotaxis suggests that the tipping point, when they fundamentally change how people move from point A to point B, is closer than many realize. The convergence of geographic expansion, competitive pressure, and ecosystem growth will ultimately determine when that shift occurs.